Welcome back, guys. After this adjustment, I'm going to move on from this question. Then I'm going to see if I can touch a bit of question 2 and a bit of question 3. It says, the loan from Westside Bank was taken out on the 1st of July 2019. So if you check the loan adjustment that we did yesterday in the Eastern Cape prelim paper, this is different from what they have brought now in the Free State. Okay, and then here they're telling us that the loan was taken out on the 1st of July. So that means we go back in time on the 1st of July 2019. And keep in mind that the financial year always ends on the 28th of February, that is the year 2023. So in this first year, it will not be 28 February 2023, it will be 28 February 2020. Because we took it on the 1st of July 2019. So the financial year in this period would end on the 1st of July, on the 28th of February rather, 2020. Then how many months do we have in this case? So it count from July, so we'd say July, August, September, October, November, December, January, February. So here I had 8 months over here. And then the next financial period would then begin on the 1st of March now, 2020. And remember, it ends on 28 February 2021. So this gives me 9 months. The next one again begins on the 1st of March 2021 and it ends on the 28th of February 2022. This would be, okay, that is not 9, that is 12, and this would be 12 as well. All right, let's continue. And then the next one would begin on the 1st of March 2022 and it ends on the 28th of February 2023. This is where we are now. Where we are, because we are now on 28th February 2023. It's another 12 months over there. So we had 3 complete years. And the first year when we took the loan, we had it only for 8 months. So it would be 12 plus 12 plus 12 plus 8. That would give you 44 months. But this loan was supposed to be taken over 10 years. It was supposed to be taken over 10 years, and each year has 12 months. So we're supposed to have it for 120 months. But so far, we have paid for it for 44 months. How do we know? All payments were paid and recorded. The first payment was made in July. So from this month, we started paying until we get to 28 February. We have been paying. So in total, we've paid for 44 months. That means we have not yet paid for how many months now? If you say your 120 minus your 44, that simply means you have not yet paid for 76 months. You have not yet paid for 76 months. Then we come here. We see the loan that is here now, mortgage loan 760,000. That is not the loan that we took at the beginning. No. That is the loan that we are owing at the end of February after we have been making payments. So the 760,000 is then equal to the 76 months. Already you know what to do here. We're now going to say the 760,000, we divide it by 76. That means how much are we paying per month? Monthly, we're paying 10,000. And then if you come to that loan adjustment, you will see in the question that follows that we are supposed to have a calculation here. All right, so we have the 760. They want us to calculate the amount for the non-current liabilities in the statement of financial position. Because here we are told we are making equal monthly installments, the examiner is already trying to tell us about the short-term loan. So we know that we're making payments monthly, which simply means in the next 12 months we're going to make payment. We know that we're paying 10,000 per month, and the next 12 months we're going to pay, that means we're going to pay 120,000. So we're going to come here, then we subtract that 120,000. So the loan that then remains is 640,000. That 120 will now go to your current liabilities as your short-term loan. 120,000. When we're preparing the statement of financial position. All right, so before I end this video, which is in about 4 minutes, you will see that here the examiner also wanted us to do the retained income. Okay, so you had the balance at the beginning of the year and you had the net profit. So here we would have what? The repurchase of shares. And we are told that there were shares that we repurchased here. I would encourage you that when you do such an adjustment, quickly come and do a mini note number 7 if possible. It will help you to get some of the figures. For instance, we are told that the company or the share capital consists of 2 million issued shares. 1.2 of these shares were issued at 4 rand. So here at the beginning we had 1.2 million. And these are issued at what? At 4 rand. All right, can I go on? So if you calculate this by that, that will give you 4.8 million. Okay, and then they go on to say, and the rest of the shares, very important. So it was 2 million authorized, okay, 2 million issued, 2 million issued, 1.2, 2 million issued, 1.2 was issued for 4 rand, and the rest is what now? 800. The rest is 800. They were issued at 6 rand. They were issued at 6 rand here. So if you say 800 by 6 rand, it will give you again another 4.8 million. All right. Now, when you come to the repurchase, remember when you do repurchase, you use the average price. So they say 12,000 shares were repurchased. We need to get average price here. How do we do that? We take this, we divide it by that. In other words, we are simply taking our 4.8 plus 4.8, that is your 9.6 million. You're dividing it by your 2 million. Okay, so quickly grab your calculator. If you say your 9.6 and you divide it by your 2 million, then the average price in this question was 4.80. 4.80. So that was the average price, 4.80. So if we are to record here, we would record the 4.80. I know this was not demanded, but I thought, why not touch it? When we come to the repurchase, remember here they tell us that the shares were repurchased at 7.30 rand. So that simply means, if you remember the triangle, okay, so here is the repurchase price. Remember the one that goes to the cash flow, and here is the average price, and the average price is how much? 4.80 rand. And here the repurchase price is 7.30 rand. So if you say 7.30 minus 4.80, the difference gives you 2.50 rand. So that is what we then bring here. So we repurchased 12,000 shares and we multiply this by 2.50 rand. I thought I could just pass by here and show you how they got this 30,000. And when they declared the final dividend, they say a final dividend of 2 cents per share was declared on 20th February. Okay, do you see that one? The shares repurchased do not qualify. So they want you to give the final dividend to the number of shares that we are having at the end there. So it's your 2 million here, multiply by 12,000, subtract 12,000. That's going to give you 1,988,000. So when I come here, on the final, it's 1,988,000. And I multiply it by the final dividend of 2 cents. That is 0.02. And it would give me the 39,760. Remember, if you were preparing the statement of financial position, this would also go into the statement of financial position as shareholders for dividends. Okay, so this is where I wrap up this question. I'm going to see if I can do another video just to show you a bit of question 2 on the cash flow statement.